Imagine this. It starts with a single move. One government decision, a new policy, a tariff. At first, it doesn't seem like much. Then prices rise. Businesses start laying off workers. Your grocery bill skyrockets. Before you know it, an economic crisis is unfolding. We've seen this before. The Great Depression started with a trade war. The 2008 financial crisis, triggered by a domino effect in the economy. And today, we're heading down the same road. So, how does a simple trade war lead to a full-blown economic crisis? Let's break it down. Before we dive in, let's answer a simple question. What exactly is a trade war? A trade war happens when two countries start imposing tariffs on each other's goods, trying to outdo one another in an economic standoff. One country decides to tax imported products, claiming it will protect domestic industries. The other country refuses to sit back and retaliates by slapping tariffs on key exports from the first country. And the cycle? It doesn't stop there. Each side keeps escalating the situation, adding more tariffs, targeting more products, and disrupting more industries. And suddenly, everything costs more. From raw materials to finished goods, from food to fuel, from electronics to everyday necessities. Let's look at a real-world example. In 2018, the U.S. officially launched a trade war against China. The reasoning? To reduce America's trade deficit and bring manufacturing jobs back home. But here's what actually happened. The U.S. imposed a 25% tariff on imported steel and aluminum, making it more expensive for American companies to buy raw materials. China immediately struck back, imposing tariffs on American soybeans, automobiles, and hundreds of other goods. Neither side backed down. Both governments kept raising tariffs higher and higher, targeting essential industries, disrupting global supply chains, and throwing markets into chaos. By 2019, this economic conflict had already cost the U.S. economy a staggering $316 billion. And that was just the beginning of the domino effect. When tariffs increase costs for businesses, companies face an impossible choice. They can either raise prices on their products to cover the higher costs, but that risks losing customers who can't afford to pay more. Cut costs elsewhere, which often means laying off workers, downsizing, or even shutting down operations entirely. And in the aftermath of the U.S. China trade war, countless American businesses were hit hard. Harley-Davidson, an iconic American motorcycle brand, decided to move parts of its production overseas to avoid skyrocketing tariffs. Ford and General Motors, two of the biggest automakers in the U.S., lost billions of dollars as tariffs increased their manufacturing costs. They were forced to cut jobs, shutting down factories, and leaving thousands of workers unemployed. Midwest farmers, the backbone of American agriculture, suffered the worst hit as China, one of their biggest buyers, completely halted purchases of U.S. crops like soybeans. By 2020, over 245,000 American jobs had been lost due to the trade war, according to economic estimates. And here's the brutal truth. When people lose jobs, they stop spending money. When they stop spending money, businesses make less revenue. When businesses make less revenue, more layoffs happen. It's a vicious cycle. And this cycle leads us straight into the next devastating consequence of trade wars. What happens when everything costs more? You feel it in your wallet, in your daily expenses, and in your overall quality of life. Household appliances? Prices on refrigerators, washing machines, and dishwashers shot up by 20% when tariffs made imported parts more expensive. Food prices? With farmers unable to export crops to China, they had to sell their products at higher prices in the U.S. just to survive. Gas prices? The global market reacted negatively to the economic instability, causing oil prices to spike, hitting every American at the gas pump. And here's the most painful reality of all. Once prices go up, they rarely come back down. Even when tariffs are lifted, even when trade tensions ease, companies and retailers don't just suddenly lower their prices. The increased costs become the new normal, and you are the one left paying the price. So the real question is, how many more dominoes have to fall before we realize the damage has already been done? When businesses start struggling and consumers cut back on spending, investors don't just sit and watch. They panic. Markets thrive on confidence, the belief that companies will grow, that consumers will keep buying, that the economy will stay strong. But when a trade war spirals out of control, that confidence shatters. The Dow Jones Industrial Average, one of the most closely watched stock indexes in the world, plunged over 800 points in a single day at the height of the U.S. China trade war. Global markets reacted with widespread volatility as fears of an economic slowdown gripped investors across Europe, Asia, and beyond. Businesses became paralyzed, freezing investments, halting expansion plans, and delaying hiring as uncertainty loomed over the future. And here's why this is terrifying. The last time we saw a similar level of panic and instability, it was during the 2008 financial crisis, one of the worst economic disasters in modern history. Back then, the crash was triggered by reckless lending and a collapsing housing market. This time, it's a chain reaction caused by trade policies gone wrong. And once panic grips the stock market, the effects don't stop there. Because when investments dry up and businesses start folding, we march toward the final domino. This is how recessions start, not with a single event, but with a slow, painful chain reaction. When the cost of goods rises too high, everyday people spend less. When consumer spending slows, businesses struggle to survive. When businesses fail, job losses skyrocket. And when millions of people lose their jobs, entire economies collapse. It's a cycle that has played out again and again throughout history. And when that downward spiral goes too far, we enter a full-blown recession. Economists warn that the next recession might not be caused by a banking crisis or a housing bubble. It could be triggered by another trade war. The evidence? History has already shown us what happens when protectionist policies go too far. The Smoot-Hawley Tariff Act, 1930, designed to protect American businesses, ended up deepening the Great Depression as global trade collapsed. The 1970s oil embargo, a result of geopolitical tensions, led to soaring energy prices, widespread unemployment, and one of the worst economic crises of the 20th century. The 2018 to 2020 U.S. China trade war, though not as extreme, nearly pushed the economy into recession as businesses and consumers bore the weight of rising costs. And now, we're seeing the same warning signs all over again. Stock market fluctuations, supply chain disruptions, business uncertainty, a cautious job market. So the real question is, can we stop it before it's too late? So is there a way out of this? Or are we doomed to repeat the same mistakes of the past? The truth is, there's no easy answer. Some experts argue that we should end harmful tariffs and focus on negotiating better trade deals that promote economic cooperation instead of conflict. Others believe the solution lies in bringing manufacturing jobs back home, reducing reliance on foreign production, and rebuilding America's industrial base. And then there are those who say we should strengthen alliances, forming strategic trade partnerships instead of engaging in economic warfare. Each of these approaches has pros and cons, and no single solution will fix everything overnight. But one thing is clear: if trade wars are pushed without a clear strategy, without an exit plan, without considering long-term consequences, then we might be setting ourselves up for the next major economic crisis, one that could take years or even decades to recover from. So the final question we need to ask ourselves is this: are we willing to learn from history, or will we watch the dominoes fall all over again? So what do you think? Are trade wars necessary to protect America? Or are they just leading us toward disaster? Drop a comment below. Let's discuss. And if you found this breakdown insightful, like this video. Subscribe to Econ Atlas for more real economic analysis, because the economy, it's all connected. And if we don't pay attention, we might be next.